Everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 7th of January, and we started out the new year with some selling here after enjoying some gains into the end of last year. So far, the worst group is the Biotechs, down close to 8%, but big moves to the upside in oil names. Let's take a look at the charts. The S&P 500, the SPY, you can see we're right on that 50-day moving average, and in the past, that has been an area where we've typically bounced from here the last few times. You've got to remember any type of support or resistance, the more often it's tested, the more likely it is to fail. I'm not calling for a failure here yet. Jury's still out, but it's something certainly to be aware of. We can draw a trend line off of these lows and see that maybe it's got a little bit more to the downside in there before it catches a bounce. But the fact that we broke to new highs here past this resistance and then failed so quickly does not bode well for the coming days, and perhaps we're headed back down towards a test of the volume weighted average price from the October low. That would bring us down towards 460, and that's certainly a possibility for even next week. This is the 15-minute time frame, and this is what I've been drawing in for subscribers to Alpha Trends this week. We had the volume weighted average price from the little breakdown in the 20th of last month, and then that became resistance here on Thursday, and we continued lower with another lower high and lower low below the declining 5-day moving average, as well as what is now the year-to-date volume weighted average price. I will start to mention the year-to-date volume weighted average price in every single one of these videos. Now on the daily time frame, you can see I don't have it drawn in yet, simply because it's too fresh. Here we see a much more accurate 5-day volume weighted average price at this point, and Monday it becomes a 6-day volume weighted average price, etc. But the fact is, money is flowing out of the S&P 500 year to date. You cannot argue that fact. It is factual. We have the declining 5-day moving average, and this prior band of support in here has the potential to become resistance. So we're going to need to get back at least above the 473 level to become more neutral, and then we'll take it from there. So going into next week, I think it remains prudent to be cautious over on the market overall. The NASDAQ, we're selling in here this week. We came all the way down to this low in here, and what I was kind of trying to point out to Alpha Trend subscribers is that what we often see is an undercut of a previous low by a few pennies and then a reversal. So far, there's zero evidence of a reversal. What we have instead is lower highs and lower lows below a declining 5-day moving average and year-to-date volume weighted average price. That's not the condition I want to buy into. I don't want to play guessing games here that this is going to be support. I want to see actual evidence of it on the shorter term time frame. I don't mind paying 386 and being correct, and being late, that is, or versus buying in here and just trying to guess that it will become support. I want actual evidence. Speaking of Alpha Trends, I mentioned it last week. We've got a sale going on. You get everything: a 1-year subscription to the premium service, which has daily stock trading ideas. This week we had a successful trade on the long side in PLAB. We were stopped out of that one yesterday. EXPI, we shorted this one at 33.05. You can see it's down at 28. We've covered it already. Took a very small loss in HLIT, and it was a good loss because we got stopped out at 11.83, and here you can see it's 11.18. Got a nice short off in Yeti at $80 per share. That's down to 78. Beam we had shorted at 75.75. Not Teladoc, but TDC. We were in this one, and it's been stopped out. I still think it's vulnerable, but there's still some good opportunities out there in the market. And what I look for each day is opportunity. I don't look for longs. I don't look for shorts. I look for opportunity, and right now the market is telling me the best opportunities just happen to be on the short side. The Russell 2000 came up to the declining 50-day moving average, and that was the end of this little rally. We're of course still in this stupid range here, back into this range that we've been in, for all but 2 or 3 weeks of the last year. So I don't see any advantage to being involved here. If you're trading the ranges, then you ought to be short, because we're again below the year-to-date VWAP, below the declining 5-day moving average, below the volume weighted average price from that 20th sell-off, and we're going to need to see 221-ish just to become neutral in the intermediate term. I don't like this market at all. I think you have the risk of a bigger breakdown. The evidence isn't there yet because we still have, all this potential support in here, but clearly the intermediate term is suggesting lower prices. And when you look at that daily time frame, the 20-day moving average is declining and it's below the declining 50-day moving average. This is where we were 51 days ago. So by the end of next week, that 50-day moving average is really going to start to become a much steeper descent as we get rid of these higher prices in that calculation. Semiconductors got hit pretty good. It looks like they're headed for a test, most likely, of this, the volume weighted average price off of this low here from October. That is coming up just in this 294 level. So getting close to that, that's a level of interest that has the potential to become support. The 50-day moving average is still advancing. So generally speaking, they do bounce, but I don't want to buy until I actually see evidence of that, because what we see instead is we started out the week strong and then we were trapped under the year-to-date VWAP and the declining 5-day moving average, and it's lower highs and lower lows. There's no evidence that it makes sense to be a buyer here. It just doesn't, it doesn't make any sense. That's it. So we can look at these levels of interest and then wait for evidence down there that the buyers could potentially gain control. The worst group, as mentioned earlier, was the Biotechs. And the Biotechs, look at how they're riding this 50-day moving average down. The declining 50-day moving average says big money's flowing out of these markets. You gotta, I think you've got to be a fool. You're uneducated to be buying stocks or indexes with a declining 50-day moving average. The clear evidence is the sellers are in control, just based on the fact of the direction of the 50-day moving average, nothing else. What we saw here was, again, we broke back below the 20-day moving average in this little band of support, and all hell broke loose to the downside. Let's look at the 30-minute time frame. Here's that prior low right here, and look at how it initially held on this bounce. That volume weighted average price off that low, it held here, and then it kind of went back and forth. Now we're below it. We're below the year-to-date volume weighted average price, which is up near that 5-day moving average. If it catches a bid next week, be aware of, it's a bounce and a downtrend, and it's likely to encounter the declining 5-day moving average in the year-to-date volume weighted average price as potential resistance. Energy, banking stocks, real strong this week. The clear leaders, they are up at new all-time highs here. They're a little bit extended in the near term. I certainly wouldn't be looking to chase them here. They've just run from 37.5 to 41 and change. And, here's where I was looking for the potential of some pullback and then move higher. We didn't get that. I'm not involved in the bank stocks, but even today you can look at, the last couple days, if you look at the volume weighted average price from this gap, and then this day we gapped lower, got back above the volume weighted average price right in here. That's a good buy with a stop under here if you're looking to, to get involved. Right now, I think they're a little bit too extended, that you'd want to see a pullback. Now that they've broken out, I think that it's likely we kind of come down towards this level. Maybe this volume weighted average price forms a bid in there. We'll see, but there's clearly buyers in here. I wouldn't be looking to sell it short. That's absolutely against everything that I believe in the market in terms of trading with the trend. And same would be true for the energy names, that you don't want to short them. They're clearly in an uptrend. They're at new highs for the for the year and for the last several years since the COVID low, and back to 2019 levels. Daily time frame, it took off through that prior band of resistance, and next week, if they pull back into here, what we'd be looking for is the potential that could become support. Broken support tends to act as resistance on pullbacks, not at that exact level. And again, I wouldn't want to buy it there. I would want to look at the shorter term time frame. Let's say, for instance, the 30-minute time frame. What I'd like to see is, if it starts to pull back, it does something like this, and kind of then does something like that. The 5-day moving average could kind of come like this. The volume weighted average price off of this low, you can see right here, or the beginning of that move, would come in like this. we would have a volume weighted average price off that peak kind of look like this. And then if it were to pinch in between there, we would see the buyers could take back control right here at something like this, and then a stop would go under here. That's not a prediction, but it's certainly a reasonable scenario to look for the potential that it could continue to move higher, in that type of scenario. That is, we don't want to chase this thing, but instead let it settle down and then buy it for the next momentum campaign higher.